Trump letter to Pelosi PDF. I'm not going to get into politics too much here. I'm just going to cover how generally impeachment and things like that affect stock market and elections upcoming and things like that. So if you want to follow along with that, make sure to subscribe to the channel in the bottom right, like this video, and comment your own opinion on this letter that he wrote ahead of time. I'm going to read it out loud for you guys here, just really quick. The right to express my strongest and most powerful protest against the President impeachment crusade being pursued by the Democrats in the House of Representatives. The impeachment represents an unprecedented and unconstitutional abuse of power by Democrat lawmakers unequaled in nearly 2.5 centuries of American legislative history. The articles of impeachment produced by House Judiciary Committee are not recognizable under any standard of constitutional theory, interpretation, or jurisprudence. They include no crimes, no misdemeanors, and no offenses whatsoever. You have cheapened the importance of the very ugly word impeachment. So essentially, people are claiming it's witch hunt. Some people are not. You're either a Republican or Democrat, or you're some variation of the mix of either. But I'm not going to get into all of that with the whole drama of politics. I'm just going to, since it's a stock channel, I just figured I'd mention how it affects the stock market and how it affects you as an individual investor and retail. So I'm going to jump right into that here. That as of currently, the market's trading pretty much at an all-time high with the S&P index, S&P 500 index hitting an all-time high. It just keeps going up and up and up. And there was recent Fed injections and things like that that helped pump it a little bit more. And the question is, how is this going to affect the market if he was potentially impeached, and if he's not? That's up to you guys to debate in the comments below if you'd like what you feel is going to happen. But essentially, in general presidential elections, it has been historically agreed by many economists that the U.S. elections have an impact on stock market, and election cycles correlate with the market returns. And according to the popular presidential election cycle theory, financial markets tend to decline in the year following a presidential election. So basically, think of it as supply and demand, or think of it as a popularity type of thing, that there's hype up into an election or a big event, and then when the euphoria fades, whether it's good or bad, things kind of cool off a little bit. So you had the election for Trump, and you had the election for Obama, and things like that, and the market gets hyped up, and then it cools off a little bit, then it gets hyped up again around the next election, and so on and so forth. And it's a very vicious cycle that goes up and down, up and down. But Uh, as they say here in this article, a common misconception is that these stock prices tend to increase when a more business friendly party wins, but according to historical data, markets actually are positively affected under Democratic presidents than Republican ones. The Dow Jones Industrial Average had a return of 82.7% during a Democratic presidential administrations, in comparison to 44.7% under Republican ones. However, it is also important to mention, as they're saying in this article, that the policy changes can take time to have an effect on the economy. So, for example, if we examine the effect but with a 1 year delay, the picture is totally the opposite. During Republican presidents, the return is higher in comparison to Democratic ones. So it kind of depends on the time frame and the policies that are being implemented. So it's not necessarily a Democrat or a Republican side of things. It's kind of a mix of both. It's more about the policies that are being passed on that given year, is what this article is essentially trying to imply, that it's not necessarily Democrats or Republicans. It's about what new laws are being passed and what new policies and things like that, and what's going on during the elections and things like that for drama, and of course with the Fed injections that I mentioned earlier and things like that. In an example they use with Obama, is after Barack Obama's elections, markets started to plunge, which was, according to many analysts, investors' fear of Obama's policies. However, as the market started to recover from 2009 with a bull run that has not yet ended, the argument is no longer valid. They claim that Obama's change policies coincided with the financial crisis. Investors' heavy selling was nothing to do with his policies in particular. It was just a kind of accumulation of, in my opinion, the interest rates stacking up, and banks can't loan out over and over and over again. So something had to happen to kind of collapse it and revitalize it all at once. And there's a whole lot of variables into that. I'm not going to get into that too much in this video. I just wanted to cover the PDF that was sent out recently for Nancy Pelosi and Trump in 2019. So just to kind of cover through the process for the election and the impeachments, and a lot of this is political back and forth. You can interpret it how you like. So again, leave your comment in below right there. And if you have any other input, feel free to share it. Going a little bit further, how if Trump was going to be impeached, what might happen, and as we're going to get into a little bit of older presidents and newer presidents with this other article that I found. When Andrew Johnson was impeached in 1868, the stock market didn't exist as it does today. Stocks were mostly made up of banks and railroad companies, according to Forbes. So it didn't get established till later and later, and then we're going to get into when the stock market started to really hit. Next president to go under impeachment proceedings was Richard Nixon. His impeachment inquiry was announced on October 30th, 1973, in response to his involvement in the Watergate scandal. Over the next month, the S&P fell 11%, and tumbled 33.4% over the following year. So, at least from a Richard Nixon point of view, the drama affecting it now, if Trump was to get potentially impeached, at least from historical market movements and returns and things like that, that it could, may have been associated, looking like it was associated with him and his impeachment. But as this guy says here, Jonathan Bird, certified financial planner, that Nixon's impeachment at the time was the least of our concerns. He noted that the Arab oil embargo began that same October, which drove up oil and gas prices. So this is similar to the 2008 crisis with the interest rates and things like that, that instead of the interest rates, it's the oil inflation and out of control, and they're trying to stabilize it and reverse it, and then just boom, and it caused somewhat of a recession. So the biggest worry that you guys should be worrying about is the fact that there was a lot of Fed injection monies in the billions of dollars, which coincided with the big boost in the last couple months, and then another recent Fed injection of about, I think it was 15 to 20 billion, that kind of boosted it up a little bit more. And you got to wonder why they're injecting so much funds into it. Generally, they're trying to stabilize interest rates similar to back in 2008. I don't feel the economy is nearly as bad as it was back then, and they were getting as ugly back then, and companies are still profiting, and the market's going pretty well. There's the big tech businesses are still growing, still making monies. I mean, this was one of the best years in many, many years for growth for retail and otherwise. But problem with how things are going now is that a lot of people are moving towards online e-commerce. So it's going to be a bit of an adjustment. It's sort of similar to a dot-com bubble a while back, but I wouldn't say you're going to see as severe of an impact. You might see a little bit of a dip, but I would say you'd be closer to worried about 2023, 2024, and further out. And I'm going to go just a little bit into this before that. It's, as I just said with the Nixon thing there, it's not necessarily going to be Trump that's impacting it through the impeachment, but something that otherwise might be going on outside of the realm of your perspective. Of course, media outlets and stuff are going to focus on Trump impeachment, politics, and things like that, but they're not going to focus on the more boring economic factors that might have caused recession type of experience. Now, recession is a strong word, sort of like impeachment, as Trump was saying, is kind of a strong word. So I wouldn't be too worried about anything majorly happening in the near future if he was to be impeached or not impeached. I honestly don't feel that presidents or politics in the longer term have enough of a pull to affect a global economy, because you got to remember that the US market's connected with other markets, and they do all these other trades and things back and forth. That Trump's a little bit more engaged, I would say, with a lot of that, but at the same time it's all politics, so I wouldn't worry too much about that. If you have your own input, feel free to share in the comments below. And this was just a little bit of a overcap of the whole PDF and the whole drama with the politics and stuff like that. I don't usually talk about politics, but I just wanted to cover the aspect of how it might affect the market in the coming months. Thanks for listening in, and make sure to subscribe if you haven't yet, and have a nice day.